Hi everyone, welcome to ESOP Radio. Thank you for joining episode 2 of the ESOP Boot Camp. Our goal is to give you, the owner, CEO, or CFO of a successful business, the lowdown on ESOPs in a quick, straightforward method because your time is valuable. I'm Trevor Gilmore, CEO of Menke.
And I'm Ben Spadt, Investment Banking with Menke. Since 1974, Menke has been a full-service ESOP advisor. We've seen it all, from capital raise to ESOP structure to regulatory compliance to value and M&A. We've done thousands of ESOPs, and as an ESOP ourselves, we're ESOP native.
Thanks, Ben. Our second episode is an ESOP right for you? Will provide clarity. Today, we'll answer 5 questions. Number 1, what is the minimum financial performance needed to go ESOP? Number 2, how deep should your executive and management bench be? Number 3, do I need a particular culture for an ESOP to work for my company? Number 4, is my industry right for an ESOP? And lastly, number 5, am I ready for an ESOP? All right, Ben, let's go ahead and dive in with number 1.
Absolutely. So we're talking about minimum financial performance. And a lot of times when I, talk to somebody that is thinking about selling to their employees, I'm concerned with, especially, let's talk 100% buyout. Consistent, strong financials, hopefully reviewed or audited, and realistically, the balance sheet is clean. There's no credit balance on debit, accounts, things like that. And then, solid EBITDA. And Trevor, do you think you have like a targeted EBITDA, or then that's earnings before interest, taxes, depreciation, and amortization?
Yeah, Ben, it's very much case by case. We have clients very much on the upper end of the middle market range, meaning, hey, they have 30 plus million EBITDA. We have clients, that are very much on the lower end of the middle market range, which generally means a few million EBITDA. But usually for an ESOP to make sense, you're going to want to see a couple million of EBITDA. And what is EBITDA? As we mentioned, earlier, it's basically your adjusted profit. So there's no one right or wrong answer there, but we do like to see very consistent earnings, generally on the upward trajectory as well, and as you mentioned, a clean balance sheet, clean financials, and really strong financial leadership. And, what we can mean by that is, strong controller, CFO, someone with a strong accounting background. We see a lot of CPAs out there, running the finance function for those good ESOP companies. And, things can change too if we're talking about a minority or even a pre-fund ESOP, which, is very much setting the stage for something bigger in the future. So Ben, any thoughts there, comparing, contrasting to a 100% deal, which we'll talk about in a future episode versus, maybe a pre-fund ESOP where, you set it up and basically use that cash in the future as the down payment.
Absolutely. And setting up, that EBITDA question, you just need cash flow to make anything work. So, having a steady or perhaps growing EBITDA, that's huge, whether it be 100% or, a non-controlling minority interest. But for those minority interests, a lot of times what we're thinking about is the growth trajectory. Are we in a phase right now as the company, are we looking forward to either revenue growth, headcount growth, which will then in turn hopefully bring revenue growth? And then when we look at that, it gives potential selling shareholders the opportunity for maybe a second bite at the apple. So you say, I have these big growth prospects, but I don't want to lose out on that top end. But I do want to get some, liquidity now or set up the ESOP, get the buy-in that will help with that trajectory. So we see a lot of things like that. But we'll talk about those in a future episode like you alluded to. But one thing you said is a strong executive management team, especially with the finance function. Can you expand more on that?
Yeah, exactly. So you think, okay, going through an ESOP transaction, it's very similar to an M&A. Who often leads that process on the company side, outside of us advising the company, and so on, is the CFO, right? So you see the CFO and their team, VP, finance, controller and so on. So, you really want that strong leadership to go through with a control deal in place. And often we see clients hiring for that before they go to market, whether it's going to market on ESOP or M&A. And lastly here, before we move on to topic number 2, are projections. And this is very crucial, and especially for companies who have never gone through this exercise, is to start developing forward-looking projections. And what we mean by that is 1, 3, and 5 years out. So whether you go ESOP or whether you go another exit, that's always going to be needed. People are always going to say, hey, let's take a look at your past performance and also what the future looks like. And you want those rooted in reality, tied to your overall corporate goals, and so on, but it is crucial to start thinking about that.
And rooting those in reality is important, like you said, because I've illustrated these out with some of our financial models showing, based on that trajectory that you business owner have outlined to me, in 10 years you're going to be bigger than Amazon. I don't think that that's possible, so we're going to have to scale it back and root these in reality, like you said. And I think that's a very good point.
Yeah, let's hop over to topic number 2 here. So, executive and management team. So let's talk about that. So, big picture, going ESOP or going any other outcome, right? You want to minimize your key man risk. So, speaking to you business owners, because that's who this whole series is targeted towards, you don't want to tell a potential acquirer, hey, I do everything here, right? You need to have a team in place that it is capable, competent, and can scale the business in the future. And that is very crucial for value and for continuity, in everything. Also thinking about the future too, right? And saying, okay, what does this company look like in the next 1, 3, and 5 years? And really planning for that as if it's today.
No, that's planning for it like it's today is huge, because eventually it is going to be today, and we're going to have to make a move today to do something, whether it be retire or get, take some chips off the table, like we like to say. That key man risk is very important, and you touched on a couple of things. One is its impact on value. So let's say it's Trevor's Engineers LLC or Incorporated. So we want to set up an ESOP for you, but every job comes through you. You source the job, you bid the job, you assign employees to different tasks of the job. So what happens when you leave? If Trevor's gone and everybody's used to calling Trevor, how do we think about that? And in terms of value, that can diminish value, because once you're gone, revenues might go down, profit might go down, because everything comes through you. And so it's very important to talk about, when you do exit, inevitably, what does the next 6 months look like, let alone what does the next 5 years look like. So it's very important to talk about those things, and putting those right people in the right seats, making sure your CFO is the right individual, your HR director is the right person. Those all help make for a strong ESOP. Those are good points.
Absolutely. And this kind of dovetails on point number 3, culture. Big picture, culture is such a loaded word. It can mean so much, right? And it's beyond the scope of, this, 15-minute session we have here.
Right.
But overall, you want the right people doing the right things. You want doers. You want an ownership mentality across your entire workforce, versus the hired hand, as we always say. No one washes a rental car. Same thing happens with employees, And lastly, longer tenure is better for key people, so there's high turnover and so on. Overall ESOPs thrive with stability, and so on, because you're keeping that company moving forward in the future. And what does that mean? A very stable base. And Ben, anything else to add there on the culture?
Culture, it is a buzzword. Every company talks about it. Every talking head on TV is talking about a company culture. And we get different pictures of it. But reality, it is, like the saying goes, is everybody rowing in the same direction. And I think that's important, to have a shared goal that everybody is working towards. And it may be difficult to establish that at first, but once you do, everything seems easier. The burden to get work done, it feels lighter. And that longer tenure for key people, that's important for a number of reasons. One, that's culture. They could say, oh, well, Bill's been here for 30 years. The company does take care of you. And so the rank and file sees, if I stick with the company, I got a good thing going. And perhaps that message, trickles down to the rank and file. Additionally, when we do talk ESOP transaction, sometimes they may ask for employment agreements for these key people to know that after that transaction occurs, are we going to maintain this trajectory, and how likely are these people to stay? Are they looking at retirement? Things like that. So it's very important to have those in place. And then, all that culture being said, is an ESOP the right fit for the company from a culture perspective? But then we have to think about number 4, and is this ESOP a right fit in the industry? And where are we seeing it take shape now? And our biggest pocket, I would say, are those AEC companies, the architecture, engineering, construction. Those professional services and manufacturing kind of follow along that, but AEC leads the pack. There are other industries where perhaps it's hard to implement an ESOP, or professional designations or whatever can't allow that sort of thing. And realistically, I think that we're seeing more and more companies adopt ESOPs because it's more a capital table decision rather than an industry decision. It's all about who owns the company now, and if they want to exit, how do they exit?
Exactly, yeah. And with that, to your point, it's more of a cap table decision, right, than just industry. Okay, yeah, this industry doesn't work. But big picture, you think, okay, a lot of new companies get formed and their future is very intentional, right? If you're VC backed, right, you're probably focused on a big acquisition, right? Maybe IPO, right? Not necessarily ESOP. If you're not, if you're bootstrapped, and so on, or a family generational company, which we see a lot of, ESOPs can make a lot of sense, right? So usually you think, okay, who typically owns this company in this industry? If it's individuals, then ESOP can make a lot of sense. If it's institutional investors, think public, companies, think private equity backed and so on, right? Then it's a maybe, right? And so on. And also, we're seeing a lot of Gen Xers out there these days go ESOP. A lot of our clients in the past year fit that exact profile. And I attribute this to them being intentional, strategic, and thinking long-term in the future. Where do I want to be? Where do I want my company to be? Versus doing something last minute. So that's interesting. And I'll tell a quick story here. Recently, we closed a minority ESOP transaction for a large commercial general contractor here in California, and very much it fit that profile, and they had the culture going in. So they had employee ownership to begin with, not an ESOP, but broad-based employee ownership, and had that very strong culture in place. We'll make the announcement in, I think, 2 months, publicly, so I'm not going to share the company's name. Company is always on the best place to work list, and so on. They started in Silicon Valley in the early 70s. Now the second generation's running it, and it's like, okay, how do we get some liquidity out? Answer was the ESOP, and it's just such a natural fit there. And lastly, companies with high retention, a strong moat, meaning, what is your secret sauce, right? What is your IP? And ownership succession issues tend to be the best candidates.
Those are good points, and I did want to mention Gen X, so I'm glad you brought it up. And I have been kind of kicking this idea around in my head, or this thought. I can't tell if it's, I saw Dad work at the company until he was 80. I don't want to do that. I want to get out at some point. Or I see a lot of MBA programs as well say, when you get into a business, day one, you should also be planning for how you get out of that business. And a lot of that is sort of that those MBA schools of thought about serial entrepreneurship, things like that, depending on what track you take. And I'm thinking, Are either of those true, first of all? And then second, does one win out over the other? But um, Gen X is very much looking for, and I wouldn't even call it an early exit, but that sort of freedom to do a number of things so you're not married to the job until, you know, you're 80 years old, 75, 80 years old, wondering how the heck did I get here?
Exactly. And also a lot of entrepreneurs as well, want to feel like they're in a partnership, right? Because, if you're the sole owner, over time you do start to notice, hey, people might not care as much, right? I'm the only one who cares. I'm on the weekends, I'm, stressed out about the budget, collections, our strategy and so on. And guess what? If you have partners who have equity in it, right, and their outcome is based on the business, things are going to change, right? So I think a lot of people realize that, and that's why startups always give equity, right, in the beginning. It's because, yeah, we can't pay you top dollar, but guess what? You're going to have an outcome, or you could, right? It's always a risk going that path. So that's a big part of it too. And of course, what's more American than owning a piece of your company, right? So there's that too. So overall culture comes down to a lot of this. Okay, let's move on to number 5. Am I ready? And this is very much kind of a loaded question here. It's a very personal question. You have to think big picture. What is your legacy? Is it tied to your business? Some people it's not, right? It's, hey, we built up this business. Let's sell it to the competitor and move on and do the next thing, and so on. Right? And then you see serial entrepreneurs do that. And then you also see serial entrepreneurs sell to the ESOP and move to the next one. We've seen a lot of that. What are your long-term goals for yourself and your business? ESOP is very flexible. It can come in and buy one share. It can buy 100% of the company. And when you envision the future, what does it look like? And that's both you as the business owner and the business itself. And Ben, what are your thoughts there? Let's talk a bit about the team too, right? Because it's really the team that really drives performance. You go ESOP, right? And you want that strong team in place to, continue driving performance and be properly rewarded and incentivized.
Oh, absolutely. And that's exactly what I was going to say. That team, because this question, am I ready? It's sort of framed from the mentality of the selling shareholder. And you have all those questions about legacy, as you mentioned, and things like that. But for the team, the executive team, are they ready? Day zero transaction happens. Day one, now we're in ESOP. What type of additional work might that be? Additional reporting? Can they handle it? Are they ready? Do they understand that this broad-based benefit is being put in place? And then also those rank and file employees. And we do a lot for the employee rollout portion of this in order to educate and inform them of what is happening. You're not becoming a millionaire overnight, but there's a potential to have a real material benefit, a real material retirement benefit by being involved with this ESOP. By, your blood, sweat, and tears and labor could turn into this sizable account, and we've seen it happen time and time again. And one thing that, in you talking about this, am I ready, made me think about, we have a client that was exploring a number of options, private equity, M&A, merging with somebody, and then they heard about ESOP, and so they filled out our questionnaire, and they expected our response to be, oh no, you're too small, an ESOP would never work. And turns out, here we are selling a majority stake in the company to the employees. Everybody's happy. And I just think you don't know what you don't know. So you may be ready and not even realize it. But to be able to ask those questions means you're probably pretty close to being ready.
Exactly, Ben. And that transaction, that client to work through that transition and so on, so fun. That was a fun one. And they're still our client, because we do the ongoing administration, compliance, and so on. So we're very much tied in, and I expect great things from that company in the future.
Right.
Lastly, I would say you need to ask yourself, hey, is your business better off solo, meaning independent, right? You have that brand name, you have great vendor relationships, client customer relationships, good product, good service, etc. If so, ESOP is probably the best bet. If the answer is no to that, then maybe not, right? There's other options out there. Sell their private equity, you can hire a business broker, investment banker, etc., and shop you and hope that works out.
Absolutely.
And lastly, if you're the planning type too, there's a lot of planners out there, right? ESOP is such an ultimate planning tool because you can really time it, versus the other ones. Take your company to market, that's all about market timing, and so on. So you can plan to shop it next year and not get any buyers. Now you're 2-3 years down that, you don't have any outcome. So, you always think, hey, what's the alternative? Doing nothing, right? So lastly, if any of these questions here are yes, an ESOP might be a win-win for you, worth exploring.
No, that's absolutely right. Trevor, I love those final points that you made. That's great. Being a planner, and is your business better off solo, or can it continue without you? Those are very important. You're right. And I think, these topics are probably the most important to look at from the lens of a business owner, and whether or not selling to their employees is a good option.
Yeah, so thanks everyone for joining today. We hope you learned something new. Ask yourself these 5 questions. Want to continue the discussion? We're around. Love to continue the discussion here. Thanks again. Connect with us on LinkedIn. You can look up ESOP Radio. You can look up Menke. You can look up both of us, Trevor Gilmore and Ben Spadt. We're both on there. We're active, and so on. Check out our website, menke.com. We have real life case studies and ESOP news on our site. And then also, lastly, reach out if you want to talk about our ESOP fit analysis. And that's the first step that we do in assessing if an ESOP is right for you. Have an awesome day. Join us for episode 3, Why Owners Choose ESOPs and Why They Don't. Take care, everyone.
Bye-bye.